Okay, so I have some good news and I also have some not so good news. Okay, they're regarding two positions, two companies that we speak about quite regularly on this channel. And it's important that I keep you guys up to date with what's going on, just in case you're not already in the loop. Now, we've already begun to see the impact of the not so good news on the stock. And it will probably explain why this stock has been hit even harder in comparison to its peers. So we're going to get into the nitty gritty of these updates. But before we dive into that, I need to address the haters, okay? And I probably wouldn't even call them haters. I'll probably call them more people who have criticized my investment philosophy, my investment approach over the past couple of months. It's no secret, okay? I see a ton of value in small and mid cap stocks. I think the blue chips, especially the likes of Apple, Microsoft, Nvidia, and many more, is pretty much a handful of blue chip companies carried the S&P, the Nasdaq, the Dow Jones on their backs throughout the whole of 2021, while small and mid caps have been absolutely destroyed since mid-February 2021. We've pretty much been in a bear market since that period. So next month, it will clock 1 year since small and mid caps have been absolutely destroyed. Even though the fundamentals and the financials of these companies, they've been crushing it with each and every quarter, they've been downtrending regardless. I mean, Wall Street doesn't want anything to do with these small and mid cap stocks, or what you refer to as secondary stocks. And of course, because these companies have been on a constant downtrend throughout that whole period, certain people have gotten emotional and said some stuff out of emotion and just makes damn right no sense, okay? If you've watched any of my previous videos, you guys know I love reading investing books. And as a result of what I'm reading, I love to share the knowledge that I'm gaining, incorporate them into my videos. One, to provide assurance that what we are going through is nothing new, and two, to encourage you guys and myself to pretty much stay the course, okay? Now, with that said, it's no secret, Peter Lynch has been one of my investing idols. I mean, I study a lot of his material and I use it in my videos, okay? So one of the main criticism I've received as a result of that is that I'm an idiot, okay? I'm an idiot because I'm investing in small and mid-cap stocks. And if I follow and quote Peter Lynch, apparently Peter Lynch never invested in small or mid-cap stocks. So I'm in the wrong for quoting Peter Lynch, for sharing Peter Lynch's teachings, but investing in small and mid-cap stocks, even though apparently Peter Lynch would never touch these type of stocks with a barge pole. And throughout last year, I pretty much ignored all of those comments. However, as small and mid-caps continue to bleed even into 2022, I'm seeing them a lot more frequently, and it's time to just clear the air, okay? So what I have on the screen is a paragraph from Peter Lynch's book, Beating the Streets, okay? Peter Lynch's book, Beating the Street. Check it out if you haven't already. But here's what he had to say. Many of my favorite picks in those years were the so-called secondary stocks, small or mid-sized companies, including retailers and banks, etc., that I've already described. At the end of the 1970s, fund managers and other experts were advising me that secondary stocks had had their day, okay? And that it was time to invest in big blue chips, okay? Now, if you're not familiar with how bad it was in the 70s, let me enlighten you. So here's a chart of what it was like in the 70s. So from the period of 1968 all the way to 1980, I mean, that period of the 70s was ugly, okay? So at the beginning of the 70s, all right, there was a 36.1% decline that lasted for 543 days, okay? And then in 71, they had a 10% decline and an 11% decline, okay? And 73 to 74, they suffered a 48% decline, which lasted for 630 days, okay? So pretty much almost 2 years, right? The market declined 48.2%. And in 74, 75, again, you can see the amount of declines. And in 76 to 78, they suffered a 19% decline that lasted for 531 days, right? 78 through to 79, again, you can see the declines here. And they lasted for numerous months. And then going into 1980s, okay, they suffered a 27% decline that lasted for, again, just about 2 years, 622 days. So that whole period of investing was absolutely nasty, okay? So picture what we have been through since February 2021 till now, but multiply that by years, okay? It was a terrible period. And of course, with what is transpiring now, where we're seeing a lot of big money, a lot of fund managers run into blue chips, Peter Lynch saw more value in small and mid-sized companies, and he was investing there. Despite fund managers telling him like, yo, you need to stop. These experts were advising him that, look, secondary stocks, small and mid-cap stocks, they've had their day, and it was time to invest in blue chips, okay? And this is what Peter Lynch said. I'm glad I didn't take their advice. Why? Because the big blue chips did not have exciting stories to tell, and they were twice as expensive as the secondaries. Now, fast forward to today's market, okay? Look at the forward PE ratios for the S&P 500, which we know is heavily weighted towards the top 10 companies in the S&P 500. The forward PE ratio for the S&P 500 for the large caps is trading at levels that is not seen in over 2 decades. I mean, the last time they saw PE ratios at these levels, you would have to go all the way back to what? The dot-com bubble, 1999, okay? This is why you're seeing many experts and analysts say we're in a bubble, right? Because look at the levels we're at. We are flirting in the dot-com bubble range, and it's ugly, okay? And this is why many analysts on CNBC are saying we're going to have a crash, because we are back to these levels. However, if you look at the S&P 600 small caps, okay, look at where we are, small caps. They've tanked. It's tanked, okay? The small caps have absolutely fallen off a cliff. You can see that it began to tank in 2021, and there's just no stopping it. We're now trading at really low levels, and also the mid caps has also been on a downtrend. The large caps are in bubble territory. So if you were to look at all three charts and ask, where do you see value? I see value here, and I see value here. I don't see value here. So this is exactly what Peter Lynch was saying at that time, that the blue chips back in the 70s were trading as twice as expensive as the secondary or the small and mid-cap stocks. And he closes the chapter by saying, small is not only beautiful, it also can be lucrative. So that essentially puts to rest that argument, case closed. And me being the contrarian that I am, I go where people are running away from. So clearly the big funds, the big money, they're running towards the blue chips, just like they did in the 70s. Whereas Peter Lynch took a contrarian approach, was buying up the small and mid-cap companies that had great fundamentals, that had great financials. And that's exactly what I am doing today in 2021. And I also believe over the long term, if you have a long-term time horizon, they will also work out to be extremely lucrative as long as the management continues to execute. So the first update is regarding Opendoor, and this is actually really good news. So I tweeted here, right? Your employees are your company's real competitive advantage. If you look after your employees, they will look after your customers. And that's from Richard Branson. And I said, the reason Opendoor has an above 80 NPS score is because 95% of its employees say Opendoor is a great place to work. Okay, so they had this poll. So this company, greatplacetowork.com, they did their survey of Opendoor. And as you can see, 95% of their employees say this is a great place to work. And as a result, Opendoor has a net promoter score of above 80, which is regarded as world-class. It's regarded as excellent. So that is fantastic news. Now on to the bad news, and it's regarding Celsius. Okay, so they filed a 424B5 form, and it's regarding our second largest shareholder, who will be dumping his shares essentially. And we have the information here. These are the companies that will be selling. They'll be selling up to 6.3 million shares. This next company, which is Greg International Limited, will be selling 5.8 million shares, and Oscar Time Limited will be selling 235,000 shares. They haven't really disclosed the percentage of the outstanding shares. And the Charmnu Limited is indirectly wholly owned by Lee Kat Singh. Okay, so Lee Kat Singh, if you're not familiar with who this gentleman is, he's on Forbes. He's the 43rd richest person in the world. He's got a net worth of over $30.6 billion. I'm sure a lot of that has been due to Celsius' crazy rise in 2021. So he's been a huge benefactor. The guy is 93 years old. And I guess he's calling it quits. I don't know if he's going into retirement or he's doing more philanthropy work. I mean, there's many reasons why stockholders sell, but they only buy for one reason, and that's because they think it's going up. There's a multitude of reasons why Lee Ka-ching will be selling. I don't know. It's not been disclosed. It's just going to be selling. It's just going to be dumping 6.3 million. And you also have Chow Hao Sheng Solina Holly, which also has an affiliation with Oscar Time Limited. They will be dumping shares. So this will pretty much total about 12 million shares that's going to be dumped by our second largest shareholder. And like I said, it's already reflected in the stock. I mean, yesterday we absolutely destroyed all of the support levels. I mean, these support levels were holding firm for a good couple of months, to be fair. But we saw a little bit of a recovery today. But I mean, this pretty much means nothing. When these guys start offloading, it's going to get ugly very, very fast. So those are the key important updates I wanted to bring to your attention. So if you get any value from this video, please make sure you smash that like button. If you're new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest video content. With that said, I'll catch you in the next one. Peace.